Welcome back to our weekly update. I'm Charlotte McLeod with investingnews.com, and we're going to run through a few of the week's biggest stories in the mining industry. If you enjoyed this video, don't forget to hit the like button, subscribe to our channel, and of course, leave us a comment below. Let's get into it. Gold and silver prices experienced declines early in the week, but look set to finish on par with levels seen at the beginning of the period. The yellow metal was trading close to $5,000 per ounce at the time of this recording. Meanwhile, silver was close to the $78 per ounce level. February 18th brought the release of the U.S. Federal Reserve's latest meeting minutes, which show that although officials largely agreed with the January decision to hold interest rates steady, they aren't aligned about the path forward as 2026 continues. What's received more attention this week is the Lunar New Year holiday. Most Asian markets are closed for the occasion and will reopen next week. I asked Ola Hansen of Saxo Bank about the significance of the closure, and he said that in his view, the more important question is what will happen when they're back in business next week. Here's how he explained it.
There was probably some profit taking coming into the market ahead of the close. So who wants to maintain a position for 8 days when you can't get in or out when the markets are shut? That's a bit of a tall order for some traders. So we probably saw some profit taking before the holiday. The question is really how would they respond when they come back? And I think if they come back to more or less unchanged prices, they will see that as probably as a buying opportunity. Simply while they probably hope that they might be able to pick it up cheaper while in their absence. But if we can manage to hold these levels, then there could be a positive story building as we see China reopen. But
Ola is bullish on gold this year, saying that he sees it reaching 6,000 in the next 12 months. But interestingly, he has a different take on silver. He thinks the white metal's upside could be limited by demand-side factors like substitution and higher supply from scrap material.
Gold over time can go to 10,000, it can go to 20,000. It's a monetary metal which doesn't really depend on demand from some or from areas where demand suddenly could be negatively impacted with the price. Silver hasn't got that luxury, and that basically means if silver or gold moves towards 6,000, I would I would think that silver at some point will struggle to keep up, and we will see basically gold relatively outperform silver. But when that time comes, I can't see it. Again, it's very unclear, especially given the demand for the speculative demand, which can carry on for a while longer.
I also heard this week from Christopher Aaron of iGold Advisor and Elite Private Placements, who has a much brighter outlook for silver. He said given that the metal has just broken out of a 45-year consolidation period, it still has much further to go.
Now, that whole process, the 45-year consolidation, breakout, and now coming back, that is for a number of people here, that is going to be a once-in-a-lifetime breakout. We're talking a multi-generational breakout happening in silver right now. And it's really important the bottom line is this, Charlotte. After 45 years of consolidation, a market doesn't end with just 2 months after a breakout and then kind of withering and petering out for the next 45 years again. That's not how 45-year breakouts happen.
Ultimately, Christopher sees $250 to $350 as a reasonable price level for silver. I always think it's interesting to hear these different perspectives, and I'm curious to know what you think as well. Let me know your thoughts on silver in the comments. The latest TSX Venture 50 list was released on February 18th, with gold and silver juniors dominating. In fact, of the companies included, only 3 fall outside the mining sector. The list ranks TSXV companies' annual performance by market cap growth, share price performance, and Canadian consolidated trading value. Taking the top spot this time around was Santa Cruz Silver Mining, with an impressive share price increase of over 1,100%. As a group, the companies on the list delivered a share price increase of 431%. We'll have to wait and see whether these types of gains are repeated or exceeded in 2026, but the list definitely underscores the strength in gold and silver prices and shows that their momentum is boosting not just the majors, but also the juniors. On the M&A side, BHP has entered into a long-term streaming agreement with Wheaton Precious Metals. Under the deal, which was signed by subsidiaries of BHP and Wheaton, BHP will receive an upfront payment of $4.3 billion in exchange for the delivery of silver from the Peru-based Antamina mine, plus ongoing payments when metal is delivered. According to BHP, this is the most valuable streaming transaction to date based on upfront consideration received. Antamina is a joint venture between BHP, Glencore, Teck Resources, and Mitsubishi, and Wheaton already has a silver stream in place with Glencore. Once the BHP arrangement closes, Wheaton will receive a combined 67.5% of the mine's silver. I'll be speaking with Wheaton's Randy Smallwood in a couple of weeks at PDAC, so drop a comment below if you have any questions for him. Smallwood, who co-founded the company, will soon transition to the role of non-executive board chair, with Haitham Hodaly taking the reins as president and CEO.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.